Hi there, I'm Tim Reed, founder of the Phoenix Group and Phoenix Real Estate Investing. Now I want to talk a little bit about how you can become the bank in this video through RRSP self-directed mortgages. Now, if you've never been in the real estate business and don't really know a lot of the options that are available for your RRSP investments, I mean, often what happens when you start working at a job or you talk to your financial advisor and they advise you to start putting money into your RRSPs, they don't really give you this option. And here's the secret. It's because banks don't make money off of this option, right? Banks make money off management fees in their mutual funds. And that's okay. They're paying people to manage those portfolios of stocks and things like that. However, I really believe in diversity. And I spoke about that in my last video, that real estate is one of the three pillars of wealth. And most people don't know that they can invest their RRSPs or a portion thereof into what's called self-directed RRSP mortgages. So you get to play the exact same game the bank is taking your money on savings accounts and leveraging it and lending it out. You can't use leverage unless you're a bank, but you can play the same game, lend out on mortgages, first mortgages, second mortgages, interim financing, secured against real estate, just like the banks do. So banks' business model is to lend out money and collect interest, and they pass all of the fees on to the borrower. Right? When you get a mortgage, you got to pay the lawyer. You might have to get an appraisal. If it's commercial property, you have to pay for all that stuff. And the bank just sits back and gives you the mortgage and collects interest. They don't pay any of that stuff. So the great thing of being an RSP self-directed lender is you push all those costs down to the borrower. And you can even charge some lender fees, sometimes known as points, to the borrower as well to increase your returns. So I'm going to give some general ranges because every deal is different, loan to values, and there's certainly a lot that goes into looking at a deal and underwriting a mortgage. Same at the bank, you want to do your due diligence as an investor as well, but I want to explain the process because a lot of people are confused about this sometimes. Okay, I've got some RSP investment that I want to be able to invest out of mortgages. Where do I start? So the first thing you need to do is speak to a trustee company and do a transfer from where the investment is right now within its current RSP container, maybe mutual fund, could be a LIRA, maybe a TFSA, and transfer that over to what's called a trust company. Now, there's a number of trust companies to choose from. We can certainly guide you through that. Some of them have got different features and benefits, and some of them are different by region. So depending where you are in North America with your 401k in the US or your RSPs here in Canada, you may want to deal with a regional company just based on time zone and customer service. So that's step one, is you fill in the forms, decide how much you would like to move into the trust company's account, and then from there you can lend it out arm's length, and I'll get into that in a second, to a mortgage. So what happens when you do a transfer, it's the same as if you decided one day, I don't like TD Bank anymore, and I'm going to go over to Royal Bank, two Canadian banks. If it's a transfer from TD to Royal Bank, you fill in the form, you transfer your money out over to the other mutual fund company, and there's no tax payable because you, the individual, never got possession of the money. So therefore, it stays tax-free because it's just a transfer. So it's the same thing that happens going from its current location within an RSP transferred over to the trust company. That's still within the RSP container, so there's no tax payable. And what I mean by RSP arm's length is there's a criteria that in Canada, it has to be arm's length. So you can't take the money out and lend it to a direct blood relative or directly to a business partner that you have a majority stake in that company. Because then you kind of, in a roundabout way, got access to the cash. So if that's the case, the government wants you to pay the tax on it, the same way as if you withdraw that money out of your RSP investments. So that's what arm's length means. And there are certainly some checks and balances there. So if you've got questions about that, please click the link below, book a discovery call. Happy to answer any questions about how that works. And then now I wanted to get into some of the benefits. So once I've got investments in the trust company, okay, now what do I do, right? Now it's about finding a good deal that suits your investment criteria and your goals and your level of risk, because a loan to value of 85% that's a really high interest rate is going to have a different risk profile than one that has a 50% loan to value, for example, on a property with a ton of equity. And you as an investor have got to think about which two camps you fit into, right? One is be exactly like the bank and never want to foreclose or own a property, because that's not the bank's business model. Banks don't want to own properties, never ever. They're in the business of lending money, collecting interest. They don't own property. They don't know how to manage them. That's a bad outcome for the bank. And if you're just like the investor and you're busy and you wouldn't want to have to take the property and manage it and deal with it, that's one camp. The other camp is the more investor approach of things. That if you're willing to go in and deal with the process of taking the property or taking control of the property and dealing with the property, taking it over and managing it yourself, that could create a major win for you, far more than the interest. If you're able to take a property, of course, we certainly don't want our borrowers not pay, but in that scenario, if it does happen, if you're willing to step in and take control of that situation, you can wind up with way better returns. And you can have a property for very little money in. So that's the second camp. Willing to step in and take care of the operations, maybe take over the project. If somebody had a challenge, one of your borrowers, that's the second camp. So we kind of guide people through the process of deciding what would be best based on their goals, based on their timeline, just based on their preferences. Because no two investors are the same. Some people are in one camp, some people in the other, and some people have got a more aggressive approach, some people more conservative. So we walk people through some of the options and what some example case studies would look like and guide them through that process. So that's the major decision you have to make, and also what kind of return you want to get. Because return that's good might be very different from one person to another person. Investors have got individual different needs. Some people want to make 20%, some people are happy with 7%. Very conservative, very safe, lower return over here. And just because you're making a high return doesn't mean you have to have high risk. And that's one of the ways that RSP mortgages can give you real estate-backed investments with a fixed return every month. And that return that the borrower pays to you, the lender, goes right back into your RSP account every month or every quarter or every year, whatever your frequency is that you work out with your borrower. And it all stays growing tax-free in your account. So that way you can play the same game as the bank, collect interest and fees, and get a way higher than average return secured against real estate, leveraging your RSPs. These are the secrets the bank won't tell you, because the banks don't make money on this. And they make money off of their traditional investments. And I believe in diversity. I think you will too. If you have any questions on this process, we'd be happy to help. Please click below to book a discovery call. We'd love to help you with this in real estate or anything else you're interested to learn about in real estate. My name is Tim Reed. See you in the next video.